Okay. Good evening, everyone, and a warm welcome to all the participants joining us for today's webinar. This is webinar series 10 on identifying red flags and report writing by internal auditors, hosted by the Internal Audit Standards Board of ICAI. So today we are privileged to have with us very distinguished members of the board and our eminent speaker. To begin the proceedings, I have the pleasure of introducing CA Ravi Kumar Patwaji, Vice Chairman ISB ICAI. CA Patwaji is a seasoned professional with vast experience in internal audit, risk management, and governance, and has contributed significantly to strengthening audit practices across industries and also at ICAI level. Sir, may I request you to please start by addressing the gathering?
Thank you so much, Sushantji. My heartfelt gratitude to you and for Purabji, Mr. Purab Gala, who is the learner speaker for the evening, for helping out ICI in disseminating knowledge to the August gathering in this webinar. And, from Internal Audit Standards Board, we started this webinar series this year under the leadership of CA Chandrasekhar Chitle sir, who is the chairman of the board, for improving the audit quality, internal audit quality, basically. And in that series, this is the 10th webinar. And today, as Shushanti has already spoken about, we are going to discuss about identifying red flags and about report writing by internal auditors. There are two aspects to this webinar. Fraud detection is very, very important for internal audit, perhaps the most important. But then, if the frauds are detected post facto, it is of no use. The internal audit department should be strong enough to, get these signals, catch these signals, and ensure that the frauds are stopped, not only detected, but they are prevented. For that, it is of paramount importance to identify the red flags. And now, what are the red flags? How they can be identified? What is the best way of treating them? All these things will be deliberated upon by Mr. Purav Gala. And the second part is on report writing by internal auditors, which again is very, very important. The report should be short, but it should always cover everything. While it should not be long, but nothing important should be left out. And it should also be pleasing to the eyes, readable and comprehensible. The presentation becomes very, very important. These days, reports without charts, diagrams are not liked by the management. So we should take care of that as well, where many of the, internal auditors, although they are doing a fantabulous job on the ground, their report writing skills are not that good. And I'm sure those who are participating in this webinar and listening to Mr. Purav Gala will improve the report writing skills a lot. The board this year is revamping all the internal audit standards. We are going to totally, thoroughly change everything, all the standards that we have. New standards are going to come. And we expect that sometime in the next month, we will be publishing it for public comments. At that point of time, whosoever is present over here, please go through it, especially somebody like Mr. Purav Gala. It will be a request to him. He has been a chairman of the Internal Audit, Institute of Internal Auditors, Bombay chapter. Incidentally, I was chairman of Calcutta chapter and has been advisor to the the National Council of IAA for 3-4 years. Now, I'm sure I would request him to go through them, go through the standards. Please note that we are not adopting the IAS standards. While we are keeping the IAS standards in mind, we are developing our own standards because we believe in our country, different set of standards are required because, there are so many things which are not really, the ground realities are not really the same as in the developed countries where IA is mainly focusing on. So considering that, we are developing our own standards. Please go through the standards and suggest the institute on whatever changes you feel are required. And I would also like to request all the participants of the webinar to go through these standards when they are published for the public comments, and then give your comments, which the board will consider before finalizing the standards. With these words, friends, ladies and gentlemen, I once again welcome all of you to this webinar. And since you are here to hear from Mr. Purav Gala and not from Ravi Patwa, I hand it over to the organizers. Thank you very, very much.
Thank you, sir, for your motivating and knowledge enriching words, and also wonderful insights about the revamping of internal audit standards. Actually, this is like the Atmanirbhar, even in the developing our own standards and not taking it directly from the standards that is there internationally. No, for sure, you and in absentia Chandrasekhar Chitre sir are doing a wonderful job at the top, and internal audit will see better days in the coming ahead for sure. So, members, our topic today, identifying red flags and effective report writing by internal auditors, generally addresses two pillars, as our Central Council member just mentioned: spotting red flags early, whether in financial records, operational processes, or behavior patterns, is what helps an organization act before issues escalate. But finding them, I'm sure everybody will agree with this, is only half the job. The other half is translating those observations into a well structured, clear, and actionable audit report that management can actually use. So, in today's session, we will gain insights on recognizing potential warning signs, applying professional skepticism, and presenting findings in a way that facilitates informed decision making. The exact examples and approaches will come from the rich experience of our speaker, making the discussion both relevant and practical. So, we are fortunate to have with us CA Purav Gala, an experienced professional with expertise in internal audits, forensics, and advisory. CA Purav Gala is also an MBA from University of Birmingham. He's past president of IIA Bombay chapter, visiting faculty at Wellinger Swiss School. He's also associated with Rotary Foundation. He was 17 years of corporate governance experience with RPG, Birlas, Ellen Mittal, and Indorama Group. He has been recognized as one of the most amongst the top 40 internal audit heads in India by Startup Times. He's currently the finance controller with HIL Limited, where he also is was the audit head for 7 years. Sir, we look forward to your perspective on this important subject, and I hand over the mic to you. Thank you so much.
Thanks, Raviji. Thanks, Sushant, for the lovely introduction. Raviji, very aptly put. I think um, India is a complex environment, so we need to make sure that the standards are kind of evolved considering the Indian landscape in mind. I'll be more than happy to, share my feedback. I'll touch base with Aarti and the team for sure.
Thank
Um,
you.
and
If you
Raviji, I
remember,
think
even for IFRS, we did not adopt them, we converged to them.
correct.
Yeah.
And I think the strength lies in convergence, very aptly put. Um, Having said today's context, Raviji, I think very well, two important things. Um, there's no dearth of talent as far as chartered accountant fraternity in India is concerned. I've been doing audits abroad as well. Uh, am I audible, Aarti? Beena, can you confirm?
Yeah,
Yes,
yeah.
yes,
You are
yes.
audible. You are very much audible.
Fair enough. So, um, the only thing that matters is how do you articulate things and at what point of time do you articulate things. As auditors, your screen presence is very limited. So, what we'll do is, without wasting time, I'll put up the presentation and we will be doing practical examples on not only how to identify red flags, we will also do a practical example on how to write a report. Just give me a minute. There we go. Share. Let me put it in. Is this in slide mode? Can you confirm?
Yes, sir. Do it the slideshow.
Yeah.
Yeah, done, sir.
So a very warm good evening to late afternoon, rather. So the topic is identifying red flags and report writing. Someone's really quoted so nicely. In God we trust, but all others we audit. And this statement itself holds tremendous potential for the audit profession and auditors at large. In God we trust, all others we audit. So, what's the agenda of the presentation? Why is it necessary? What are the expectations of management and stakeholders? We'll do some case studies, significance of communication in internal audit, and some Q&A. What is the definition of internal audit? What is the evolution of internal audit? What is the premise for existence of internal audit? And where are we today? This is a very technical definition. Independent, objective, assurance consulting activity designed to add value and improve an organization's operations. It helps an organization accomplish its objectives by bringing in a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance processes. In one word, what are you? You are basically a value advisor. When I say value advisor, you not only unlock value, but you also provide assurance. An assurance to maybe a CEO, a CFO, the shareholders that controls are effectively being operated by. Why is it necessary? Can you see this gentleman? He is the one who actually introduced auditing standards. There is a book called Arthashastra, which he has written. And he introduced the concept of auditing in his book. If you go through his book, the premises of our accounting standards can be corroborated. Record what comes in, record what goes out. In his book, he has clearly mentioned the role of Gopas or the auditors. I'm sure few of you may be aware about this, but majority of you may not be aware. The book has been written very nicely, and a lot of the foundation that we have in our accounting standards, like revenue recognition, you will be able to correlate here. Very important because controls, frauds, they have all existed from the time mankind has evolved. I come back to World War II with the concept of management science. Concept of internal audit has regained relevance across corporate boardrooms. After the World War II, American corporate industry, in fact, started a trend where they kind of separated promoters and they engaged professional management. And that's how the concept of audit has gained relevance. Let me tell you, why is it necessary? If you look on my screen right side, it shows that every organization actually aspires for growth. So, should you aspire for growth? Should you aspire for controls? Now, controls and growth both are contradictory. Control is like a brake, growth is like an accelerator. If you put accelerator at a very high speed, controls go for a toss. And if you just put on the brake and don't press the accelerator, the growth won't come. So, what is important? Fast growth, strict controls, or is it controlled growth? Controlled growth is the answer. Why? Management, let me tell you one thing, very, very important. Management is responsible for establishing and maintaining a system of internal controls within an organization. And it is charged with this responsibility on behalf of the organization's stakeholders. It is held accountable for this responsibility by an oversight body, board of directors, audit committee, elected representatives, so on and so forth. A dedicated, independent, effective internal audit activity assists not only management but also the oversight body in fulfilling the aforesaid responsibilities. So remember, when a client tells you that I'm on a growth trajectory, you need to tell him that controls are equally important. And controlled growth will pave the way for a strong foundation. Internal audit is the only function that has access right from the lowest level of I could say right from workman till the board. And it's a cornerstone of very strong governance and internal auditing. It bridges the gap between the board, the senior management and operational level management. It not only assesses the ethical climate and the effectiveness and the efficiency of operations, but also serves as an organization's safety net for compliance with rules, regulations, and overall best business practices. As we come to the forthcoming slides, I will be able to demonstrate this with an example. The four cornerstones of good corporate governance are management, external audit, internal audit, and board of directors. Today, IA or internal audit plays the role of catalyst. It provides insight and recommendations based on analysis of data and business processes. It provides value to governing bodies and management. How do you provide value? We'll see that with examples. It is an objective source of independent advice. It is no longer a watchdog. Today, it's all about enabling business. Okay, before we come to the case studies, we also need to understand what are the expectations of management and stakeholders. So what we cover in this slides is globally, specifically in India too, the expectation in terms of providing assurance has increased. No, with tech, with AI, the board today expects, the CEO, CFO today expects that I give maximum assurance. And how do I give maximum assurance? How do I select what are the audit areas that need to be covered? What is a smart way of doing or selecting an audit area? And what are the best practices? We will see in the next slide. World over, managements are now focused on getting maximum assurance from IDA. But let me tell you, you need to stand up to your client and tell him, if you get an engagement, I can provide you reasonable assurance. I cannot provide you maximum assurance. Focus is now shifting from risk-based approach to adding value approach. Should internal audit be a cost center or a profit center? At what cost is internal audit adding value? Should the cost of internal audit be justified by savings? And what is a better sourcing option? Should I, as a businessman, should I engage an in-house audit resource or should I give it to a CFO? Let me tell you, friends, as auditors, we can only provide reasonable assurance. Reasonable assurance is the maximum assurance. You cannot audit 100% of the transactions. It's humanly not possible. Yeah, using tech You can do 100% sample size for a particular process, but all the processes, all the transactions, 100% audit is a challenge. Coming to the question, should I be a cost center or a profit center? Let me give you a classic example. A client of yours may engage you saying that, okay, Purav, I want you to you know, work on this assignment, maybe for 10 lakhs or 20 lakhs. These are the areas. Can you do a good job for me? I would definitely tell him, I will do the best job for you. I will tell you what controls need to be inculcated if they are not there in the processes. I will also tell you not to be dependent on resources, but the process should be strong enough so that irrespective of resource change, the process will work and the control will not fail. And that's why I should be looked at a cost center, not a profit center. Desire to demonstrate value, perfectly understandable. It will win you accolades from everybody, management, board. It will make friends also. When Intranet is able to point savings that surpass its cost, the management and even the board will claim credit on robust corporate governance. But my view, value addition should be an eventual outcome of Intranet use. It should not be the sole focus area. I repeat, it should be an eventual outcome of audit reviews. It should not be the sole focus area. We are in the business of providing comfort that the controls are in place and working properly. The operations are in compliance with laws. And that comfort has got tremendous value. So primary mission is to provide assurance. The cost of providing assurance can never be thought from a perspective of return. Do I expect my state governments to tell the cops or the police machinery that the budget is so much, so I need to have this much return from you? We are spending so much on you, so this is your target. No. Similarly, while I'm not making a direct comparison of police and auditors, all I'm trying to say here is the cost of providing assurance can never be thought from a perspective of return. In-house audit, outsource audit, I think which is better? Anything is better as long as there is professional, competent, and experienced staff available. Oversight and responsibility of IE activity cannot be outsourced. Total outsourcing, partial outsourcing, co-sourcing, subcontracting, all options can be reviewed by audit committee in sync with the assurance requirements of the entity. Coordination being a vital aspect, current trends indicate a mix of both in-house plus outsourcing, what we call as co-sourcing. So with limited resources, how does internal audit function ensure reasonable assurance? So now the focus has moved from traditional approach to risk-based audit approach. Risk-based audit approach encompasses compliance and control-based approach. Audit plan should be formulated on risk register, recommendation of stat auditors, request from management, business heads, and audit committee. So formulating an internal audit plan is very crucial element of internal audit and one which requires prudential judgment. I hope this is clear. So have you seen how does a risk register look like? What I'm going to do is in the next slide, give you a risk register of a company. You need to tell me which are the areas which you'll pick up first. Um, Someone from the tech support or Bina, can you confirm that chat box is available for the participants to write something? And can that be shared with me on the screen? Excellent. Is it possible for me to view it? While you come back, just a count of how many participants are there. Sure. Excellent. So this is a risk register of a company. Function A, process is about capex. The risk says additional cost implications due to delays in completion of the project. The risk rating is extreme. Then you have another risk on corporate HR. The process is compliance. Fines, penalties, legal implications due to employment of contract workers in direct production process. Friends, you are aware that contract workers, by virtue of the Contract Workers Act and regulations, can be used only for non-routine activities. They cannot be used for direct processes like production. It is non-compliance. Then you have an SBB where there is a working capital process or an issue. The product margins are in negative. Higher lead time is for procurement. Slower realization of receivables. Overall, there is increased stress on the working capital. Business continuity impact in short run is possible. Corporate finance, taxation, payment of sales tax and penalties if C forms are not collected on timely basis. I know we are now operating in the GST, but for the moment, as an example, you may consider this as a risk. Now, you've been asked to take up two assignments in quarter one and two assignments in quarter two. So, how will you plan? Which is the area that you will do first, second, third, fourth? So that you let me know. Maybe you can type in the chat box. Is this data enough? As auditors, we are used to look at something else. This is good English, but at auditors, what do we need? We need this materiality. Now, I think you should be able to plan. Which are the areas that you will cover first, second, third, fourth? Um, Tech support, Sushant, any feedback that can be shared on the screen from the participants?
Yes, sir, I'm tracking the answers that the participants are giving. So I'll tell you immediately after I'm there with the answers.
Sorry, Sushant?
Yeah, I'm tracking the answers and the questions that the participants are feeding in. So immediately once I get an answer, I will let you know.
Sure. We'll give them a minute or two, I think.
Yes. So we've got one answer as capex and taxation,
That is one and two.
uh, and one answer as first priority B followed by HR.
Hmm. And what about third and fourth?
One more answer is here working capital, capex, and compliance.
No, so this I think he has not heard the question. I can do only two areas in quarter one and then the remaining two areas in quarter two. So which are those two areas which I'll take up in quarter one? Any other answer?
We have an answer. One is HR and finance.
Hmm. Why not B or A? I have now put the amount, materiality in question. So against each area, you know what is the value at risk and what should I cover.
One answer comes in gradation of audits, working capital, then capex, then HR, and then taxation.
Okay,
And another answer comes in I will start with B and then HR.
fantastic. So two things, friends. I mentioned in the beginning of my presentation that compliance is equally important. We are in the process of giving comfort on compliance. Secondly, business B definitely is in dire problem. And that is where we need to help as assurance providers. So I'll take up B and corporate HR. Why? Because the risk is more. While finance and C forms are also a compliance issue, but compare the amount and you'll come to know which area you need to take first. The limited point I wanted to draw here is application of mind. You need to be prudent in selecting what areas you will do. So next time when you formulate a plan, do keep in mind what are the risks that your client faces. Write down those risks. Against each risk, write a tentative or estimated amount and mention it as materiality in question. Review the risks rating and then select how and what are you going to do as far as audit approach is concerned or audit plan is concerned. I hope that's clear, friends. This is how I would look at it. A very important point I want to leave you with. This is a normal risk register that you look at and then formulate an audit plan. But friends, if you were to do assign an internal audit for a client, you should also do some areas that are never touched. And I'm going to tell you which are those areas. Rewards, recognition, leave pattern of employees, very interesting. Security system, insurance claim settlement, ERP login reviews, guest house expenses. Trust me, from all the 2 decades, almost 2 decades that I've spent in this area, all this exceptional area audit reviews have been eye openers, irrespective of the company that I've worked with. So, next time, if at all you are assigned to undertake the audit of a entity, you should look at doing an additional exceptional area, just like this, that is mentioned on the slide. ERP login, leave pattern of employees, rewards and recognition, so on and so forth. 101% you will come to know that you have unlocked value because controls in this area are normally not institutionalized, and the chance of people getting away, whether by mistake or otherwise, for transactions is very high. So management wants internal audit to be business enablers. So how can a IA function be business enabler? Does internal audit participate in the steering committees, task forces set up across the company? What is the level of interaction time audit has with CEO and CFO? Do you organize training sessions, educate process owners on their approach and objective? Does it make an annual presentation on their key achievements to the executive leadership? Development of rating systems which can be incorporated in internal audit reports. If I were a CEO, I would definitely want you as internal auditors to tell me of the 3 factories that I've assigned you audit assignments for, which is better managed in terms of control, hygiene, safety, compliance, so on and so forth. So at the end of every audit review, we need to solicit feedback. And are we actually positive? Typically, we always have a negative mindset as auditors. And I think this is high time. While we should always keep our skeptical hat on, doesn't mean that we need to be skeptical in our tone, tenor, and approach. A proactive approach is required. I may be happy to point out a mistake in the process. I may be happy to kind of forgive the person who is not adhering to process, perhaps. But a proactive approach, that this is the solution so that this control will not fail again, is something which will not only enhance this level of satisfaction as a professional, but also earn you appreciation from the client. What is important? Communication, networking, reporting structure, generation of internal audit charter, generation of audit committee charter, using of tools, budget for training IA staff. Do you change the format of internal audit reports frequently in sync with the audit review? You should. And most important, how efficient are your follow-up reports? The last line, very, very important. There is value unlocking here. When you follow up for a pending action audit point, and how do you unlock value? To whom should the audit report ideally report? Functionally to the audit committee, administratively to the CEO and the managing director. The reporting relationship actually determines the level of independence accorded to IA. Very, very important. Reporting relationship determines the level of independence accorded to an internal audit. It's also demonstrate the company's important perspective on corporate governance. Are they looking at it seriously or otherwise? How efficient are your follow-up reports? There is a lot of value unlocking here. The CEOs, the CFOs, the business guys, they may not have the time to ensure follow-up on implementation of processes. But if you do it for them, I think you will definitely earn respect. Are follow-ups being conducted at frequent intervals? Does our audit effectively highlight recurring points of non-compliance? Does IAS submit to a board annually a report containing non-compliant points of follow-up reports? So compliance level today is also an indicative measure of how auditing is process owners and management view the internal audit function. Let's come to case studies. I've got 4 case studies. I'll give you 5 minutes time for each case study. We'll try to do 3. And the 5th one also is important. I have attempted to make this subject with examples, as typically this is a dry subject, and hence the reason for having illustrations, so that maybe there is some takeaway for you at the end of the session. Friends, 2 important things. Having an audit mind is very, very important. The second thing, knowing the business, most important. You may not have an audit mind, okay. But if you do not know the business, not okay. And why not is an important word that an internal auditor must use very often. See, you have a purchase register here. Order date, supplier, item code, unit price, quantity received, quantity due, quantity invoiced. Okay. Quantity billed and invoiced. So this is a purchase register extract. It shows the purchase order number, the order date, the supplier, the item code, the unit price, quantity received, quantity due, quantity billed and invoiced. Quantity billed or invoiced means GRIR done. Goods received, invoice recorded. Just have a look at this data, and maybe in the box you can type of what has gone wrong here. I'll give you 5 minutes. Just a hint, purchase orders raised at what time, what is the price, what is the quantity ordered, how much is received, how much is due, how much has been billed. All is given. If you come across this example or a similar type, definitely this is a red flag. So as yes, sir, Sushant.
Yes. So we have couple of answers. So one answer is for third one, quantity received and quantity billed differs.
Right, but can you tell me what exactly has happened here? I need the participants to analyze and tell me what exactly. If you look at this data, there is a pattern and there is a story which comes out.
Another answer we have is quantity extra invoiced by 100 quantity in last item.
That is partially correct, but I need a story what exactly has happened.
Another one is for third, PO quantity received is 9,500 whereas billed is 9,600. Again, a similar
That's a
pattern.
repeat. Yeah.
Yes. One more answer or so part question of it is why no quantity delivered for second line item and why the rate has gone up from 240 to 290.
Yes, you're close by. So what's the story that comes out?
So another answer detailed one is PO dated 16 to 2011 over invoicing of 100 units and the same item code has a different unit price in this PO compared to the unit price in PO 21 1 2011. No material received under PO dated 8 to 2011.
Hmm. So just try to friends connect what could have happened. If you find this data, there are two things that is expected. One, you need to understand what has gone wrong, and if you understand that correctly, What is the solution that you will provide to your CEO, CFO client as a process so that deviations don't happen?
So we have one more answer which says where three-way matching PO, bill and GRN are not there, internal control breach. That is what happened.
Yes, but what is a breach is what I want to know.
One more answer that we have is I think PO is edited, price has increased, and the quantity received has also changed.
Hmm.
Material received against PO having high rate while low rate PO not serviced.
Super. Very good. Anything else that you see? What? So, from if you were an auditor and you come across this data, what is the control depth that you would note? Any other responses, or otherwise, I will provide an answer.
Similar responses to the earlier ones.
Okay, so what has happened here? Look at the register. The first PO was raised on 21st January for an item code, say 1000. The supplier is ABC. Price agreed is 240. Quantity ordered is 15,000. This is a purchase order. That means commitment from the vendor who has agreed to receive this PO. So ABC has committed to provide 15,000 at 240. He has only provided 5,500. What about 9,500? He has still not supplied it. Then the buyer at your client's place has raised another PO of 10,000 for 240 rupees per piece. Same item, same supplier. No item has been delivered against this. Now there is a third PO that is generated. Look at the time. The time itself is outside office working hours. So that should also raise alarm that there is something more than what meets the eye, and therefore we need to check in depth. Look at the time, late night, after office hours. The buyer has created another PO but at a different rate for 290 per unit, and quantity ordered is 15,000. Quantity received is 9,500. Quantity billed and invoice is already 9,600. So typically, this 9,500 that you see in the last PO should have been accounted against the first PO spending 9,500. But there is no system control like a FIFO method which will enable or ensure that there is a sequential or a FIFO approach of receiving material at an agreed rate. Otherwise, I need to close the PO. I cannot just simply have two POs where material is left undelivered, and there is one more third PO being generated. And the very fact that this has been created at odd hours at night definitely will ring alarm bells. So I'm going to tell the CEO, CFO that look, I'm finding it a little bit skeptical. This requires a little bit more in-depth review. The price of 240, for which 9,500 is pending, has been increased to 290 and received against that higher price order. So what is the system control that I will incorporate? The system control that I will incorporate or advise to my client is whenever I receive material, it should be knocked off against an open PO. Point one. Point two, if there is some quantity that is not delivered, say in this case, he would have supplied 9,500 against PO1, which is a balanced quantity. If you would have provided 9,400, 100 I can still keep it open, or and then I tell my management, please close this so that I can start receiving material against the second PO. When the second PO gets closed, the third PO will get activated from a GRN perspective. Is it clear, friends? So here there is a loss of 50 rupees for 9,500. Shall I move to the next one? Now let's take an example on sales. This is volume and discount policy of company X for April and May 2010. Discount policy for product P is as under. If I raise an order for 4,500 quantity for product P, my discount will be 5%. If I raise order quantity of 5,001 to 10,000, the discount quantity that is offered is 10%. If it is between 10,000 and 20,000, the discount quantity is 15%. If it is 20,000 and above, it is 20%. As an auditor, you come across with the status of open sales orders as on December. Now have a look at this sales order book. Customer name is there, sales order number is there, item code of what has been sold to that customer is there, item description is also there. Order quantity means what is the quantity that I've ordered on the vendor. What is open quantity? Pending to be delivered. So these are about 4 cases that you have in front of you in your screen. You need to tell me what has gone wrong here. Similarly, apply your mind. Any questions? I have already mentioned the discount policy, and this is a sales order book. Any responses, Sushant, or we'll give them some time?
Nothing as of now.
Let them a minute.
We have a response. The discount has been given on the ordered quantity, but actual sales is less. There may be chance of fraud because of sales incentive.
Fantastic. Super. Good. What else will you go and tell your client, CEO, CFO, business head relevant to this business function? Okay, he said, okay, what is the solution? As auditors, we are expected to provide solution. So what is the solution?
Open orders at end of 2011 means that these delivery did not happen and maybe they wrongly benefited from higher discount percentage.
Okay,
For XYZ, when 12,000 is still open, why 15,000 adjusted for 20%? Only 3,000 should be at the rate 20%.
perfect. Anything else?
Giving the discount on final invoice to be ensured. Otherwise, the open sale order may get cancelled and give high discount. One advice that would be incentives should be based on actual sales completed rather than sales order.
Super. Okay, so I just paraphrase this data into an additional column. Quantity dispatched and invoiced, open, selling price, order date, discount offered. So, so can I say that policy on sales discount be changed? Can it state that all bulk orders shall be dispatched at one shot, or can it state that in case the customer does not leave material against a confirmed bulk order in 2 weeks, discount structure shall revised? So how do you articulate this value proposition is very, very important. Also, how do you articulate that this is a control lapse is equally important. And you need to partner with the client to bring in that required policy change, again check and provide him that assurance. Okay, now let's do something different. Sales purchase is done. Let's look at login IDs, segregation of duties. So there is a company X which is uses ERP like SAP, we have Tele, Oracle, whatnot, a lot of options available in the market. So you do a ERP review. You should do a ERP review for your client. So there is a module called purchase module. It allows the user to generate a purchase order. Then there is a stores module. It allows the user to generate a GRN. Then there is a stores module. It allows the user to issue material for production. So purchase, he can create GRN. Stores, he can create stores receipt. So purchase can user can generate a purchase order. Stores guy can create a GRN, and he can also issue the material for production. Now you do the when you do the review, you come across this following. Gentleman number one has got rights to raise a PO. Gentleman 1 has also got rights to create a GRN. Gentleman 1 has also got rights to issue material. In the next case, as view B, gentleman 2 has got rights to raise a PO and right to, that's it, right to raise GRN and issuing material is given to gentleman number 3. Which of the cases mentioned here are incorrect according to you, and what is the solution way forward? Any responses, Sushant?
Nothing as of now. We have one response. In case of auditee 1, SOD not followed.
Okay, what is the risk here? What is that you'll articulate to the client? This is again a red flag. Look at the data carefully and see who has get rights to do what. So purchase module allows the user to generate PO. Stores module allows the purchase to the user to create a GRN. Stores also allows the user to issue material in that ERP. So what is the
In,
risk?
in case of A, all three rights are given, which weakens the control.
And what is the control that is being weakened? Can someone give me an example?
Person placing the order and receiving order should not be the same.
Super, well said. Person purchasing, raising the PO, receiving the material, and then again issuing the material. So beautifully, I can play with the system. Create a fictitious purchase order, create a fictitious GRN, create a fictitious issuance note. Finished. Material physically has not come, but the vendor will have to pay. So this is again a limited point I wanted to highlight. While I've given a very simple structure, today's complex ERP systems do shed lights similar to what is there, but at a much complex scale. Someone who has got rights to document, incorporate, record JVs, again risk. So again, you have to understand, the point is you have to understand the business. You need to understand what is the risk here. If someone plays around, what can happen? We'll move to the next case study. So let's now try and understand how a fraud can happen. I'm skipping this. So Company X provides canteen facility to its employees. Canteen is managed by contractor Y. Every employee is given a meal coupon booklet, 26 coupons. Booklets are serially numbered. If A is issued a booklet with number 2000, all 26 coupons will contain the number 2000. There is no expiry date of the booklet. Employees can continue using the coupons till the booklet gets exhausted. The charges of the booklet are deducted from the employee's salary. Employees submit meal coupons to the canteen contractor. The contractor collects the coupons. Company is invoiced by the contractor based on total coupons collected and the rate fixed for each meal coupon. Coupon issued to employees have been correctly deducted from their salary. So today, if I go back home and if I have dinner, say maybe at this hotel or this canteen, then I will issue a coupon. The coupon does not have any validity. Very important point. Bills and invoices are submitted by the contractor on a monthly basis along with coupons. The invoices mention the number of coupons and the agreed rate per meal. There is no process to verify the bill and corresponding coupons. Payment is made by the accounts directly to the contractor based on the invoice. Please configure how and what kind of fraud can happen. Will you want me to toggle the first slide again? Five minutes, Sushant.
Yes. We have 4 to 5 answers that have come in.
Oh, do we? Okay.
Yes, we have
Mm.
4 to 5 answers that have come in. One is an employee who has left could hand over coupons to contractor who can bill against those coupons.
Mhm. No.
One more is invoice can be raised for excess coupons and actually utilized, and also there is no expiry of coupons.
Mm. Close.
There may be a possibility that coupon number may not be claimed by employee and still vendor charges for that.
Mhm. Anything else? Maybe another 5 minutes.
Yeah.
After this, what we will do is, Sushant,
Yes.
there is some more presentation, but we will again go to a case study for report writing.
Okay.
I have a call with um, Europe at 6:45.
Okay.
So we'll try and wind up early.
Okay. Sounds good. One answer that's come in is coupons. Issue of coupons without expiry date may lead to encashment of coupons without the employee utilizing the facility for lunch provided.
Mhm.
Coupons issued to employees are correctly deducted from their salary, hence there is no loss to company. Contractor even join hands with employee and submit all the coupons for claim. Cost to company remains the same.
Mm. No.
Yeah.
Read the second paragraph for the last answer. There is no process to verify the bill and corresponding coupons.
We have one answer here. To deduct the amount from salary, the number of coupons used by particular employee should be known to the accounts team. There might be unused coupons. Also, the number of meals provided by the contractor cannot be validated by the accounts team, thus requiring a control to trace the utilization of coupons like the employees, like e-cards.
Okay, partly maybe the solution part may be good. But friends, you need to think like a fraudster. The idea is, what is the motive of fraud? Bypass the control, make some money, and be quiet about it, and not get caught. And even if you get caught, you can always blame that there is no process. So in this case, what has happened is contractor himself got the coupon submitted from a printer and he started adding. Now, how do we catch this? We took data for 12 months. Okay. And I took the attendance data of 12 months. Assuming that everybody used the coupon every day, we reconciled. Okay. And when we reconciled, we found number of coupons for 12 months were 3 times the number of coupon booklets that got issued to all the employees. That means if I assume that there are 100 employees and those 100 employees have a meal every day, Okay. The billed amount was 300 for 300 employees. Now that's not possible. That means the contractor was kind of making money. So solution is, if the coupon thing has to continue, it has got to have validity. It has got to have employee name. It should be kind of correlated to his attendance. Better still, use technology. You have retina scan, you have thumb, all this biometrics can be used, and directly the actual amount of meals that actual count of meals that an employee has had can be deducted. That's a win-win for the company as well. So if I'm attending office out only 20 days out of 26 days and I have meal 18 days, I'll be deducted for 18 days. Clear? Okay, so without wasting much time, let me come to the communication part. Most important. How do you articulate? When do you articulate? Two important things. How do you articulate? When do you articulate? Your screen presence against in front of a CEO, CFO, not more than 5 minutes. And in that 5 minutes, you need to mention and ensure that you convey your message properly. So let's jump to the example. Report writing, most crucial part. On an average, CEO, CFO will not give more than 5 minutes. Do you ensure that your audit report has an executive summary? Does your report actually catch the reader's attention? Does it contain the background area of the area that you're reviewing? Does it give best practice? Does it give impact, risks, recommendation? What is the management response, agreed action plan, responsible person? Do you issue covering letters? Does your report even mention appreciation for a prompt action taken by auditee during an audit review? Everything cannot be written in negative connotation. It has to be written from a factual perspective. We as professionals, unfortunately, have a tendency to sound negative. If we change that by 50% also, value unlocking will come automatically. And even if there is a difference of opinion, it should be reflected in the audit report. We'll do an example. Do you take sign off from the auditees? Do you have a draft report? Do you have a formal draft report? Do you have a final internal audit report? Does your report mention limitations? Do you actually quantify the potential economic benefits, value unlocking? Do you link risks associated along with for the controls that are absent? Okay, so on and so forth. When you see the example, I think it will be clear. So I want you to draft an observation for this data point. You're doing a review of sales function for division X. Total sales for period April to March is 5 crores. Breakup of sales is given. Direct sale to customers, sales to dealers, total number of dealers. When you interact with process owners and the business head for the division, it is confirmed that the company does not have agreements with dealers and distributors. So you need to draft an observation, mainframe observation, recommendation, impact, management response, and agreed action plan. Now you need to tell me how you can actually unlock value or depict value. So when a CEO, CFO reads that observation, he is compelled to take action. He should pick up the phone and tell his colleagues what is the audit reporting and why this has not been thought by you. So what should you, how and what should you write is very, very important. Again, the data point is in front of you. Take your time, and somebody can write the mainframe recommendation, impact, risks, management response, and agreed action plan. Again, sharing a very basic example, but the essence or the idea behind it is to help you articulate it in a very crisp, short, factual manner. Let's see how you can perhaps incorporate this in the chat box. Take your time, 5 minutes. Any response? Sushant, you're on mute.
Sorry. We've received one response.
Okay.
That is absence of formal contracts with dealers. That's all.
Hmm.
I don't know in what context that is.
Okay, let me share the screen. So your audit observation and recommendation both parallel to each other. See the heading, so important. The moment somebody reads the heading, he will be compelled to read further. So writing a report is a very important skill in an art that you must skill yourself with, friends. So SBU X sells products to customers, channelizes sales through appointed dealers. Total sales is this much. But look at the heading, potential opportunity to improve working capital. Now, why do I say working capital? Because I do not have an agreement. And if I take an agreement from a distributor, I have an option of taking a deposit or I have an option of taking a BG to secure myself. Okay. In absence of a written contract, increases financial and operational risk. Okay. An opportunity to improve working capital exists in lieu of security deposits, which can be obtained in case agreements are inked. An agreement acts as a medium to ensure fulfillment of performance between two parties, and in case of legal dispute, they provide official discourse. Your recommendation is that you should ink agreements with all its 20 dealers on a priority basis. Impact and risk, very important. Financial, I've categorized the risk. Financial, operational. So non-obtainment of security deposits increase credit control risk. Interest on security deposit amounting to rupees dash lakhs can improve working capital efficiency. No control over dealers in case they push sales. Increases risk of reduced bottom lines. In case dealers are not communicated in writing the minimum sales price at which they sell to customers. This is all forming part of the agreement. Operational, what is the risk? Territory customer specific rights cannot be assigned. Absence of control over the targeted or budgeted sales of dealers. Legal risk in case of dispute. Management response noted. We are in the process of initializing legal agreements. SB is also contemplating on obtainment of security deposits. Responsibility, target date of action. Absolutely crisp and clear. The observation, the recommendation, the risk, the response. Who will take it? What is the date of action? In essence, friends, what I wanted to tell you is how you communicate and when you communicate. When can always be decided by you, but how is most important. That's it. I think we are well on time. Any questions so far? I'm happy to answer. You can
We
always
have
reach out to me at this number.
we have couple of questions that we received at the start of the presentation. One
Sure.
was, does ICI prescribe any standard format for internal audits?
There is a handbook guidance note on internal audit. You can refer.
One participant was asking, are we going to get this presentation? Would we get it?
No, no.
Any Q&As, participants? That's the only couple of Q&As that we have, right?
Okay. Thank you, Sushant. Thank
Yes,
you,
I'll
SAI
just
team.
end it on that. On behalf of the organizing team, I extend my heartfelt gratitude to all the participants and also to CA Purav Kalaji for sparing the time. He's having a very busy schedule, as I can see, and thank you for sparing the time. It was wonderful with practical examples and deep insights. Also, case studies, I'm sure it was enriching for understanding of procurement, sales discount, SODs, and ERP controls. Also, a big thank you to the organizing committee and technical team for their efforts in ensuring this session ran smoothly. Let us carry forward today's learning, as Sir said, with an audit mind, asking why and why not to uncover the truth and protect organizational integrity. Thank you so much and have a very wonderful, great evening ahead.
Thank you, Sushant. Very well encapsulated. Thank you,
Thank
all
you.
the participants. Bye.
Thank you.